Any business, you cannot squeeze anyone dry. You have to leave value on the table for everyone. And when we're building projects that actually require very large scale participation, even though they're very poor and they don't have very good bargaining power, they're the ones who are carrying most of the weight in terms of the ongoing projects.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Yeo, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 40,000 members and get transcripts, resources, and community at www.bravesea.com. Stay well and stay brave. Hey, Joanna, good to have you on the show.
Good to be here.
We've been friends for a while, and I thought now is a good time to talk about what you're doing in ClimateTech and Agritech, both of which is a bear market right now in Southeast Asia. What you're doing is such an incredible mission that we got to spotlight you and see what rustles out there. Could you introduce yourself?
I know. I'm an entrepreneur and investor. We have built a company called Arukah. It is working with agriculture in emerging markets to convert waste into biogas and biochar for carbon credits and food security and unlocking incomes for low-income people. I also serve on an impact investment committee for a United Nations fund on sanitation and hygiene.
Amazing. I would love to dig into that. I think what's interesting is, let's go back in time. I already warned you about this. The reason why I'm laughing is because you're one of the only people I know who's been to Harvard for undergrad, then Cambridge for grad school, and then after that went to Stanford for graduate school again. As somebody who's gotten the track marks you need to have for the triple hoop, the jump through. So I'm curious, how did you do it? This is not how to be an Asian parent and get your kid there into 3 top schools. I'm just kind of curious, what's your perspective behind that? Why did you want to do that? You were not a scholar, so you do this on an individual capacity. What was going on during this time?
Thanks for asking the question. This is taking me far back. I had really good teachers in school. When you're very young, someone who is an expert in something or is ahead of you, they look at you and they say, I believe in you. I think you can do this. It unlocks paths that you may not even have realized were possible. I had a lot of favor from very good people who saw something in me and wanted to help. I was encouraged to apply to top universities when I was coming out of JC. So I just went through standard Singapore education system. I was also a good student. I really like extracurriculars. I think it comes down to favor and teachers being, hey, I believe in you. Why don't you try this? So I was actually encouraged to consider applying to the States without scholarship. And the idea there was really to say, look, if you don't have to take a scholarship, not that there's anything, I mean, it's great if you want to, but if you want to kind of explore more, my teachers could see that part of me, really understand the world and answer questions about the world. So I was encouraged to look into applying to top schools, would be able to provide scholarships. I was very lucky to get one. So I went to Harvard for my undergrad. It was a great name and everything, but what closed it for me, because I actually visited a few places and my mom wanted me to go to study medicine in the US instead, and safer, right? Because I'm a girl, I'm like running all over the place. What unlocked it, or why I decided, was when I went there, I just felt like everyone had this optimism and idealism. The idealism is it's okay to develop extreme standards of excellence on anything, even if it's not something that has a clear path to a career. I really appreciated that. That was special about that. I had a good ecosystem of friends, also teachers who believed in me and called things out. That's how the next step came at Cambridge. I had a bunch of teachers who, somewhere in the middle of college, they were, hey, you're really like the fellowship profile type, so you should think about applying to the UK after you graduate. So I did, and I got fellowship, and I went to Cambridge, and that was also quite wonderful. It's good having a different perspective because these are all good schools, but because of the history of each of the schools and the countries they're in, you get a very, very different mix of students. You also get a very different mix of approaches to solving problems. And I'll summarize that actually once I get to Stanford. And basically from when I was at Cambridge, I decided, due to different reasons, that I wanted to continue studying international trade and that I would be able to pick up some interesting tools if I went to Stanford, where I was also offered a full ride to continue graduate school. So I went. It was not something planned. I didn't didn't say, oh, I want to go to all these schools. I was just kind of step by step going along as benefiting from very good peers and teachers who believed in me and pointed me in a certain direction. Comparing across the three, what it gave me was very, very different sets of approaches to looking at a problem. And maybe later when we're talking about Singapore and Southeast Asia and other markets, that's a segue to that. Each of these schools, because of Boston's sort of old America, right? The early settlers, very connected. At Harvard, how to solve a problem was very much, you can solve any problem you want. These are the resources, and we can make these intros. At Cambridge, there was also this whole like weight of history, because Cambridge is much older school, and England, Europe's much older nations. I remember walking into the college I was at Cambridge, and it was this whole, these were the halls that Nabokov, Nehru, and Newton walked through, and you're just very intimidated. Like, oh, I'm walking through, sure, thanks. And so you're also resourced to solve problems, but there's also there's a weight of history. And then when I went to Stanford, actually, it was very interesting because obviously it's also a historically significant school. And so there was much more of this blank slate. Let's solve a problem, we break it down, let's figure out what kinds of tools there are. And so that was also a different type of perspective, right? So they're much more likely to say, okay, we assume blank slate, like game theory, like modeling, this is the mechanism we can build. The program I did at GSB is very oriented towards mechanism design, the eBay auction mechanism, advanced market commitments for vaccines, and actually climate came out of that. So it's very like tabula rasa, let's like build things from scratch. I'd say I'm very grateful for the three perspectives. Whenever I look at a problem, I can always switch. I can think, where do I need this perspective? I would encourage people, it doesn't have to be specific schools, but being in different environments that have a different approach to solving problems and achieving success is always good.
I love what you said about all these famous alumni walking through the halls. It feels like their ghosts are there. You must be great one day. So when you were at these schools, obviously, it was interesting because you were doing a lot of political economics, government, and you were not a Singapore scholar. So there's some interesting dynamics there. What was your goal? Did you say, I want to be in government because I'm doing all this political economic stuff?
Yes.
Like, what was going in your head? Because you were doing a lot of this stuff, right?
Oh, that's a really deep question. I'd say I wanted to make my parents proud. Honest answer. By the time I was graduating, I was starting to feel very grateful. I could see how much resources I'd been blessed with. We had a lot of opportunities to run conferences, get fellowships, to go travel and do interviews, and people open up their doors to us. I studied international trade, and all these people who were directly in the negotiating rooms would answer. I felt so grateful. When I was moving to Cambridge, I had a very deep sense of gratitude. And the fellowship I got when I was going there also encouraged this. It's called the Gates Cambridge Scholarship. It's actually their 25th anniversary this year. They're really themed around impact and selecting for people who want to make an impact on the world. Going into Cambridge, I had this sense of there's a world that's so much bigger than me. The year I was in England, a couple of things happened that informed my decision to go to Stanford. I was studying a lot of international trade. Not everyone has a seat at the table. I was very lucky because we have so much technical expertise. We earn ourselves a seat at the table. I think Singapore also does a really good job at trying to unlock access for other markets as well. They have a lot of leadership in that space, but generally it's just big countries, right? Because that's what people want market access to. I was very conscious that market rules are not formed evenly. Not everyone has the same bargaining power. A friend who's Singaporean referred one of my team members. She had come back from field working in Nepal. She noticed a lot of criminal trafficking activity targeting poverty. They would find the poorest families in the villages and condition them for a while. After the families kind of in that mind space, we're not going to survive, they would point blank say, you can sell us your child as a prostitute. And this was my moment of, wait, there's something wrong. I was angry, I was sad, juxtaposed with studying international trade and realizing not everyone has the same impact on rules. I had this very specific mission statement that I wanted to do something over the course of my life to connect vulnerable groups at scale to economic opportunities, but it has to be sustainable at scale, which means it has to be market. So that informed my decision to go to Stanford. I wanted to continue picking up tools for understanding how you build market infrastructure. When I was there, something unlocked because Stanford has this very cool school called the Design School. A bunch of my friends took this class called Design for Extreme Affordability. There was an aha moment. The insight there is basically like any problem can be broken down and solved. You can always take a step forward, right? You can talk about bias to action or whatever. We can say, okay, there are all these systemic issues, but what's the one thing that can be done? The design for extreme affordability class was something that opened my eyes, like my friends sharing about it, that you could use business to solve these problems. When I first went to Stanford next, I was thinking, okay, I'll get a PhD. I'm going to map out inequality and access to knowledge and capital and use network theory to map it out. And then I'm going to go to the World Bank and convince people to allocate resources differently. My friends were sharing what people were doing at Design for Extreme Affordability, which was taking a very bottom-up approach. And this may never work. It's important work. But this is something I can actually get something done. I can start moving the needle a little bit. That was the trigger to say, okay, let me just try that. I credit Stanford and the environment there with opening my eyes to see that business can be very value creating. If we think about Southeast Asia, a lot of it is really about gatekeeping resources. The dynamics are quite different. Whereas in the Bay Area, they're very used to let's come up with something new, right? And so that was the journey.
Yeah. And I think what's interesting is that from that set of experiences, you went into your first experiences at work where you're doing finance in terms of private equity and Morgan Stanley. So I'm just kind of curious about what was
Was the
driving that,
journey?
right?
Yeah.
Because here you are saying okay, I want to save the world,
Yes.
top up, bottom down, and I'm entering finance. So I'm just kind of
The
curious.
immediate connection.
Yeah.
For a lot of my friends who grew up with me, they think I would be a doctor. You are good at science, you want to help the world, go be a doctor. Yeah. So what happened was actually immediately coming out of Stanford, initially I was thinking, oh, maybe we start a business and we were exploring some things. And in that process, actually got the opportunity to pitch some investors. And actually, around that time, Singapore was already doing quite a good job bringing in some VCs. So I had the chance to pitch Tim Draper, and then he was send me your pitch deck. And that was I have no idea what you want moment. As I was getting some feedback from friends and everything, okay, actually, I think this is a big step. I think that a huge part of unlocking markets and new market access really is understanding how to access capital markets. That's what led me to try to go to the buy side. Investing side, I met some people. My first job in the buy side was with one of the subsidiary funds. The thing that got me over the hurdle was the managing director there, who is now the CEO of Capital. She's an amazing boss, Christina. The core group of them actually came out of GIC. When she was talking to me, she said, in the end, what we're doing is we're stewards of capital, and everything we do, we need to make a return, but we also need to do so responsibly. We make returns while managing risk because ultimately we're managing pensions, and the pensions affect the man on the street.
Right.
It was the only person of all the people I was interviewing with who talked about the social responsibility of managing capital. And that's how I ended up going to join them. And then it was a really good experience, very well run. They gave a lot of opportunities. It was actually quite early on where they were just starting to look at sustainability. There were two things happening. There was a CEO transition underway. They did group-wide scenario planning, and sustainability came out as a big theme. And I mean, kudos to them. You look at what they're doing now, everything is sustainability themed and very asset management heavy. So that's testament to strong leadership there. And the other thing that was coming up was this thing called sustainable. There were investors from Europe who were saying, hey, we can invest in your fund if you can get this sustainability credential. Credential is very what is involved, is it very loose? But the interesting thing is for real estate, it's actually very, very measurable. So it's stuff like water use, electricity use, you track a lot of things. That was my first insight into an aspect of capital markets, which is that capital has a huge impact on allocation, resource allocation decisions by whether it's fund manager or companies getting funding from investors. Secondly, the more measurable and verifiable it is, the more powerful it is. It's tangible for the investee and much more verifiable for the investor. And so it was a really great experience. Then I had the opportunity to move closer to China. I was thinking about the market a lot. That's when I moved to Morgan Stanley in Hong Kong. There, I also had the opportunity to do something quite interesting. The other thing that was quite interesting about this time going into financial markets was that it was post-financial crisis. There was a lot of active reorganization in capital markets. Banks were pulling a lot of assets off their balance sheet post-Basel. A lot of European capital was diversifying out of Europe, and they were long Asia. So basically what that was doing was creating a lot of flows that I then had a next opportunity to think about how capital and assets get allocated at scale. When I was at Morgan Stanley, I'm very gifted, so I like raising my hand and being, what are your top 3 priorities for the next 6 to 18 months? And I just go around asking this question. I like asking it when I meet people. One of the things that came out at Morgan Stanley with some of the senior leaders in the division I was in was that they were thinking about ways to even out cash flow, have it be less lumpy, because it was a lot of closed-end funds, and closed-end funds basically have lumpy cash flows, and because you book all the profit at the end. So I asked question, they gave me an answer. This is the other note to anyone who's early in your career. It's always very, very good to take initiative. If something sparks your interest, people actually welcome it. There's not enough people to get all the work done. If someone wants to show initiative, it's quite valuable. That's how I ended up getting looped into this thing at Morgan Stanley where they were building a new open-end fund structure. It was a new business for Asia. That particular division I was in, all their businesses in Asia so far had been closed-end. And this was an opportunity to build something open-end. And so this was an incredible opportunity for me. Obviously, I was doing a lot of work, like modeling, like read all the legal stuff. But it was a way to see a global bank build a long-term new business and how they worked with capital, like wanted to allocate what they needed from the bottom up in terms of track records to be able to construct something that is now one of the main business lines for that particular division in Asia. So that was a really interesting opportunity. When I was halfway through that, one of my mentors pulled me aside, who's an MD, and what you're doing is great. You're doing great work. But fundamentally, asset management is just going to keep being more of the same. And she knew that I kind of want to do something to make things more fair. We were in this was by mid 2010, so kind of like 2015. No one could have missed Yuebao and Alibaba. They had basically gone from 0 to top 3 mutual funds in the world. She was like, this is the future. You really need to be moving in this direction. And around that time I had the chance to join this Hong Kong conglomerate who had just divested a big chunk of a brokerage business in Hong Kong to a Chinese company. They were looking to build a new asset management business. And because it was a diversified holding company of financial services businesses and they were doing balance sheet investing, there was the opportunity to do tech, fintech, financial services, and diversified global coverage. So that's when I moved there. And that led me to the next step to fintech, actually.
Yeah. And so where you went to next stage is eventually you also got into the regulated blockchain space as well. How does that happen? I mean, is it this a continuation of the finance journey you're talking about, or how did you see that?
Yeah, I mean, there were a couple things happening. First was I was still at the back of my mind thinking I'm solving problems along the way, but I still have that big question: how do you connect vulnerable groups at scale to economic opportunities? Along the way, okay, this is how you build an investment track record for a new asset class. This is the kind of structuring you need. We couldn't miss mobile, right? When I first went to the Hong Kong company, we were doing a lot of mobile enabled platforms. Then with blockchain around 2017, we were getting a lot of inbound. So starting about 2016, when the first run kind of started, we were getting a lot of inbounds, everything from let's partner with your brokerage to do trading, let's fund a Bitcoin miner. So I was studying it for the corporate, like what we could do strategically. But I still didn't really think about it so much because a lot of it was crypto as an asset class. But in 2018, a mentor who's now one of our advisors, he was then the CEO of the IFC's SME Finance Forum. I connected with him actually through Harvard Network, alumni network, very valuable and helpful. He was very generous to take a call and talk through things. I said, Matt, I'm very worried about small businesses and market access because from where we were sitting, investing in private equity, also investing in tech, I just could see like the wedge growing in terms of opportunities for just normal small business. How do they survive, right? He said, oh, I understand what you're concerned about. He was the one who said, look at mobile and blockchain. Okay, mobile, I get it, but blockchain, what are you talking about? It's like crypto cowboys. Didn't see
Proud about being crypto cowboy. So it's not a negative phrase.
the little farmer or like smallholder farmer in the emerging market. And he said, no, look at blockchain as an infrastructure.
Yeah.
And the fact that it is immutable, distributed, and the cure, these are very powerful in markets where you don't have secure access to centralized sources of data and finance. So look, how do you build a credit history? Around then, a Stanford alum who had previously built one of the largest fintech platforms in America reached out because he was thinking of building regulated financial services on blockchain. He was really, blockchain, I think this is going to change the long tail of finance, transform it. He's not doing crypto. What he's doing is automating things like the settlements, like transfers, and in a way where you can do 100% audit and control all the time. Fast forward to today, they have done over $16 billion in regulated financial services on blockchain, fully functional. I was lucky. At the right time when I was thinking about it, someone encouraged me to look into the technology. Then someone tapped me on the shoulder and said, would you join? I had the opportunity to do that. And I went for it.
Yeah, and I think it's interesting because that was your real startup growth stage experience. Because
Yes.
before that, you're in finance. Were there any culture shifts or things you had to unlearn?
It was the first tech startup experience, but it wasn't really the first 0 to 1 experience. The time I joined finance in Asia was unique because it was post-financial crisis. Every buy-side role I was in, I had my buy-side main job, official job, but then I was spending a lot of time building new businesses because I kept raising my hand to ask questions. And so I actually had a lot of opportunity to build like 0 to 1, like new businesses within a larger business. This was quite a natural next shift. I wasn't going to build from scratch. That would be a giant jump. But here, I'm coming from understanding how to build new financial services businesses from scratch. This particular tech platform was really about how do you drive new technology adoption. Partly it's by originating things that people don't otherwise have access to. So that was my segue in. I think what was very powerful about it, I'm very grateful for the experience. They went from like Series A to unicorn like a year and a half, right? So you really see how quickly things can grow. It was Silicon Valley anchored, a very powerful ecosystem. It was strong peers, high energy, let's solve problems. Also seeing how the whole company is organized. You're hitting a lot of milestones. How do you organize about 200 people in the company? I was in the leadership team. I saw that if a fast-growing business is truly optimizing for certain things, they will be able to report on it. You always have a list of targets. You're really optimizing for they're tracking it every single week in 3 different meetings, the company level meeting, the leadership meeting, the sub meeting, the one-on-one. I think what I learned there was best in class, fast growth building, how you organize a team. I'm very grateful for that. Then it started overlapping a little bit with the pandemic. So again, this is a lot of serendipity in life. So someone taps me on the shoulder, the recruiter. There's a company that had just gone into partnership with the World Bank IFC for this program called the Distress Asset Recovery Program. It's a program that has about $6 billion of assets and a $40 billion book. And it's really there to make sure that there's institutional secondary liquidity in the market. It's there to make sure you don't miss 3 loan repayments and lose your house. That particular company had operations across Southeast Asia and they were looking for an independent director. So I had the opportunity to join. And when I joined, it was about second quarter of 2021. That was my moment because I joined a very good team. I saw the books and I'm, oh wow. We're sitting in Singapore, we can't travel, we can't go eat at restaurants. And then you look at the books and people are missing these, what don't look like very large payments, right? And in a very big way. And so that kind of triggered like, oh, okay, what's going on? So then I started looking around and that's what led me to this stat that alarmed me and then started this journey. The stat that alarmed me was an estimate that up to 100 million more people across Asia would drop below $2 a day. I immediately connected it back to the experience at grad school where my friend was sharing about systematic targeting of poverty. And that worried me because if we think about it, I was concerned that would pick up. But then on the flip side, I also saw the opportunity. Chinese have this word, like in every challenge, there's also an opportunity. And what I felt around that time, Southeast Asia by 2021 hit digital payment volumes that we were only supposed to hit in 2025, was actually a big opportunity to do something if we could figure out where all these people are. When I looked further, most of them were in agriculture. So that's how I ended up in agriculture.
Let's talk about that.
Yeah.
Which is that you became a founder now. There is an intersection of ClimateTech, Agritech. And I think that 1/3 of all jobs in Southeast Asia today is in agriculture.
50% of emissions are from agriculture.
I think there's some interesting dimensions here.
Yeah.
So why the intersection of these two worlds, right? ClimateTech and Agritech, and why be a founder to attack this?
The quick answer is I felt that the scale was the reason we focused on agriculture and the fact that that is where the people at $2 a day are, or even $6 a day. That's another threshold for poverty. If I want to address the problem, I need to go where they are. So let's try to figure out what their issues are, what are the problems. And Climate, I had started with that sustainability reporting thing while I was at Keppel. That was in real estate and very well defined. Other than in real estate, it was very hard to come up with concrete measurable things. I also invested in this company waiting for materiality for listed companies for ESG. If you waited for materiality, there was a returns impact. If you didn't, there wasn't. But there's not that many places where you have structured data around this. I thought, let's see if there's a way to intersect these two markets. At that point, in the middle of the pandemic, the climate pickup was starting, right? Climate change is real. Agriculture areas are very affected by climate change. I think yields are already globally about 20-something% down relative to a few decades ago. And they also have a huge impact on climate, like in our region. Burning is a big issue. Even though climate's a little bearish overall, it seemed like the right intersection because the demand for solutions on the climate side was going to keep growing. And I still think they're going to keep growing. And where I wanted to create new income opportunities was in agriculture. The next thing to do was to figure out how to get to that intersection, which is where we are now, which is taking agriculture waste and converting it to biogas and biochar. We sell both the physical product. So the physical product for biochar becomes fertilizer. And then we also generate carbon credits, which we take to international markets. And the opportunity there actually is a huge arbitrage opportunity, right? People burn agricultural waste because it's not valuable. But if you can aggregate it in a certain way, these biomass type projects are very valuable in global markets. We see the opportunity to create a very standardized set of projects that can do that. And the other piece, because we are very committed to poverty alleviation, so we commit that 50% share of our carbon credit project revenue is allocated to the participating farmers so we can unlock more income for them. That also makes it feasible for them to do stuff. I feel like a lot of the climate space or carbon markets, they have a lot of things where it's very hard to get farmers to change their behavior. But you're asking someone to change their behavior for 10 years with no income. Would we do it? I don't think so. Farmers, when you visit them, are really small businesses on the ground in emerging markets. In the same way that we would pay people to do things to contribute to a bigger project, they should be paid too. And that was something also that I felt with the digital infrastructure emerging in Southeast Asia, both on the payment side and internet connectivity. There was an incredible opportunity to do something where we take the principles of embedded finance. Embedded finance unlocked financing for small businesses, small factories. We can verify data around their actions, and then we can pay them, bring that to agriculture too.
What does the product market fit process look like? Because it's interesting because it sounds like a mixture of both top down and bottom up. Because one part of it, we go, okay, I want to do something in climate tech. I also care about poverty and I care about agriculture.
These pieces
How did you land on carbon credit and biochar as a solution? How did you land on that solution?
I wish I landed on it immediately. The real answer was an iterative process. I started out saying, okay, I know embedded finance. There are all these ag techs in the region now. So let's do embedded financing to ag techs. And then the extra secret sauce I'll add in is we bring in people who care about impact and we use the measurable impact to bring down the cost of financing. Rates rose by 400 basis points. We also were able to work with one of the top credit guys in the market who's been on credit committees for multiple big books. And he helped us underwrite some of our first deals. Realized some of the ag techs were not as digital as the narrative, so we couldn't actually track the data. And because we're forcing them to report the data to get the rate down, we're like, okay, if we can't verify this data. Then for the ones who could, we realized they couldn't meet a lot of very basic credit conditions. So that's when we were, okay, maybe we pause on this. But around that time, I had already been doing a lot of deep questions with all the supply chains we were working with. The other cool thing about Singapore is people think of Singapore as not agricultural, but a lot of people who either own agribusinesses or invest in agribusinesses sit here. So we actually had a lot of access just from Singapore because it's a major commodities trading hub. So we had a lot of access to people who either owned or invested in these very large agri supply chains. One of the things we were doing was asking them to say, okay, can you lay out all the sustainability and climate linked activities you're doing? And I want to figure out if there's a way to get you better financing through that if the process is digitized. That's how we first discovered biogas, because it was a very large dairy supply chain you were working with. And they said, oh, we're doing this thing with the cow dung. The farmers process it and get biogas and carbon credits, and it's 6 tons per year. My approach with everything is I quickly call the 5 experts I know. I called a few people. Is this real? Is this doable? The answer was yes. And I started understanding what they were doing on the ground. The problems were basically the farmers were not getting paid. A small group might keep at it, but there was a lot of drop off. And they needed to earn more money to do something about it. So I'm okay, business model, something can be done. But there's a huge opportunity because India has very good payments infrastructure. And you can track, because once it's a machine, I can put in sensor. Costs a bit more money. I need to figure out the financing is doable. We quickly run to the carbon buyer side and carbon financier side. What is the problem? And the problem is fraud. Don't know if it's actually installed. There's also drop off. Then there's incentive misalignment. The auditors, everyone's incentivized to just say everything's working fine. There's a lot of uncertainty there. This is an interesting opportunity because we can figure out the financing. I have feedback from the people who are generating revenue for the project, what they need to see. Is feasible to build in 100% full metering of everything. It's just more expensive to then allocate a share of it to farmers for verified. So that's actually what we've done in India. And that was our first project. It was very bottom-up investigative. We run there to the buyers to say, what do you need? To our knowledge, it's a CORSIA compliant methodology. It's been around for more than 10 years, but to our knowledge, we are the first group that's done 100% metering of all the devices. Per farmer, we have an emissions reduction run rate that we track on a dashboard. The farmer can interact with us via a WhatsApp chatbot, be how am I doing on my emissions? And then they can get paid and get notifications that they'll get paid. Over time, we're going to also ask them to upload something to enrich the data set. It was a step towards embedded financing of Agritech. Realized there was an issue. There was 400 basis point rate hikes. One of the supply chains was doing this thing. Quickly go and get feedback from the market. And then how we ended up with Biochar was I was talking to a group about biogas. It was a group doing biogas projects, and the guy who was on it is a Japanese climate guy, and he was, hey, there's across biogas and biochar, you can sort out almost any kind of waste. It's very sad.
Yeah, that's a lovely story of product market fit, right?
Yeah.
Like, you're discovering the market, the cost, the mission, and then different types of solutions that you tried and pivoted from there. This is an amazing story. My second last question is like today the market's pretty bearish, right? I would say change or tech or whatever that is. And then in Southeast Asia, there's also funding winter. And then in Agritech, there was an e-fishery scandal that hasn't made things easy for them, which ties to the fraud concern that a lot of people have around the agri side as well. So I'm just curious, but when you think about building in this climate, how are you thinking through this process?
This is a big question. Let me take a few pieces. The first piece on Agtech, and this is something we realized when we were looking at financing companies. Agriculture is a very, very deep market. Someone from Delhi or Mumbai can't necessarily talk on the ground to the farmer in a village because they're speaking different languages. These networks take like 20, 30, 40 years to build. There's some losses there, but there's also a lot of trust. Our insight was it's not easy to rebuild those just with money. You need time. So instead, after going through that round with the agtech financing, insight was we really want to work with agri-businesses that are digitally enabled, right? And help them unlock what we think are more inclusive business models through new business lines rather than trying to rebuild the whole value chain. The rebuilding is doable. It's not a VC play. It's like an infrastructure play, like a commodities play. So that was the first insight. If we then think about climate and Southeast Asia, these are whole other questions. Maybe how I will first approach it is to say, let's think about the intersection, right? Since we are in Southeast Asia and climate change is real, right? And I think for Singapore as an island state, we could be submerged very soon. And not to be alarmist about it, right? It's to say, okay, what are practical solutions that are an opportunity here? My approach is always to think like, how did China lift 1 billion people out of poverty? They didn't lift them up by getting very alarmist or doing a lot of handouts. They said, okay, let's connect these people to markets at scale in a stable way. The insight I would focus on for Southeast Asia and climate is where are we uniquely positioned to create solutions that are of a higher quality at a better price than anywhere else in the world, right? This Econ 101, what's our comparative advantage, right? And Singapore's role in that is quite powerful because we're in Southeast Asia, but we're all very capital heavy. So we're able to be a nexus for quick testing. If I think about the opportunities in Southeast Asia, there's so much agriculture. That's an incredible opportunity. Also land cost, labor cost, a lot of the agriculture waste is low price relative to the value if you process it for global markets. The third thing Southeast Asia has as a great enabler is the digital infrastructure. There's internet connectivity, so you can build in sensors. Singapore's trying to be an AI hub. and we're moving in that direction. Spatial intelligence, right? Two of my interns, before coming to work with us, were working at the DSO, developing computer vision systems to track persons of interest. Those types of things can be brought to tracking a factory in a last mile area. I think the opportunities in Southeast Asia and climate will really be focused on anything that's lower cost to build here, anything around agriculture for sure, and then anything that really benefits from the ability to digitize. Singapore has a good role in that space. As a capital markets hub, it's not just a capital markets hub because neighboring countries have their own capital cities with a lot of wealth. But what we have is a capital markets hub that's also quite unique. This links to my public service role at the Impact Investment Committee, which is really about how do you build the investment track record, like kind of flywheel for new asset classes. In Singapore, you have the full spectrum, right? We think of capitals in Singapore and sometimes Temasek and GIC. There's also all the insurance companies. So those are the big ticket guys who can write $100 million, billion-dollar checks. But they're not going to start with the new asset classes. What Singapore has is a lot of people who are accredited investors. They can give you a $10,000 check, $50,000 check. With that first $100 to $1 million, you can build a track record that then can take in money from like smaller family offices, smaller funds, gets you to the 20 to 50 million track record. You can start taking money from slightly bigger funds. Some of the banks will start doing it. The opportunity is also within Singapore. We have the entire capital markets ecosystem to build out the investment kind of flywheel. So that combination, I think is very symbiotic. Like Singapore can create a lot of value for our neighbors and unlock for the region, and then our neighbors are the ones who are very resource rich and there's a lot of opportunity there. So I would focus more on the opportunity because there's still demand, but you need to be very laser focused on it. Like what is there actually demand for? I'll give you one example. Biochar is quite popular. People talk about it, but for us, when we started building it, the first thing I did was I'm like, okay, who are the biggest buyers in the market? Like the tier one buyers, and people are setting prices. There were European and American companies with a lot of AI exposure. Their marginal cost of abatement is very high. For them, it's important to have very durable carbon removal. I basically went straight to them, whether it's publish things on their website or get intros to talk straight to the buying team. They said they can only do one type of biochar and not another type. They gave us a clear criteria like minimum scale, needs to be legally enforceable, as legally binding as a private infrastructure project. They need certain design features around the product. Most of the market is not doing that. So that's something I'd say Southeast Asia has a lot of opportunities. We have in terms of resources, we have a cost advantage. What we need is that laser focused link to who is really driving the market and being able to connect into that information to build product that will actually be bought.
Amazing. The last question here is, could you share a personal story about a time that you've been brave?
Thanks for asking the question. I'd say building Arukah has been brave. Specifically, it's the commitment to the 50% share of the carbon credit revenue to farmers on a gross basis. And shout out to my team, to our partners, to our investors who have signed up for this and are in it for the long haul. It requires turning down a lot of things, right? Courage is you continue even though it's a bit scary. It's everything from your buyers when they find out there's a 50% growth rate to farmers, they're like, oh, okay, so then you can sell it to me half price. Some of them will walk away. You have investors who have the same view. You have partners who are very good, but they're like, why are you giving money to the farmers? To be clear, we don't give money away, right? We equip them to participate in the projects. And our view is really they should be better off when the project has ended in terms of access to market infrastructure than before. But this requires courage because we're playing the long game. Any business, you cannot squeeze anyone dry. You have to leave value on the table for everyone. And when we're building projects that actually require very large scale participation, even though they're very poor and they don't have very good bargaining power, they're the ones who are carrying most of the weight in terms of the ongoing projects. It might be equal, but they need to do the daily work. It's a very short-sighted thing if we want to do high integrity projects that can actually be digitally verified. If we are expecting one group to not be paid on an ongoing basis, we're being short-term idealistic, but long-term would be very, very good. It's also been unlocking a lot of doors in terms of access to biomass. It requires courage, but it has also created a lot of friendships and good aligned people that we're very grateful for.
Fantastic. On that note, I'd love to summarize the 3 big takeaways from the conversation. First, thanks so much for sharing about your educational achievements. It's just nice to hear about the rationale for why you thought about. I think what a strong sense of mission and purpose was really guiding you through those conversations. Secondly, thanks for sharing about your own experience in kind of finance, your professional career. I thought it was just fascinating to hear about how you thought about your values and some things that you were learning about building 0 to 1 new businesses and being part of a high growth startup. Lastly, thanks for sharing about your experience building at the intersection between agriculture and fintech with the carbon credits via Arukah. It was fascinating to hear about some of the trade-offs you had to make. But also I think it was really fascinating to hear the product market fit, because I think so many people want to approach it from a top-down basis. They want to help the world.
Yeah.
And so they do top-down, but they never arrive at a solution that works.
Yeah.
And a lot of people also try to do it bottom-up, but never really does in a way that connects with.
It needs to scale.
I think it's a really powerful product market fit story. On that note, thank you so much for sharing your story.
Enjoyed the conversation.
Okay, great.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.